Hello students, today we are going to see chapter number 5, accounting equation and business transaction. So this is the second part of the same chapter. Here again we are going to see one more example of the accounting equation, and here is your sum. Let's see transaction number first. So here first transaction is of the write the general entry for the following transaction and explain accounting treatment based on equation. Ramesh has brought cash of rupees 20,000, furniture of rupees 10,000 and commenced the business. So here cash account debit, furniture account debit to capital account. That journal entry is supposed to pass, and let's see the accounting equation for that. As we know that cash is increasing, furniture is also increasing, then capital is also increasing. So three of that is going to be increased because of this transaction. So cash is 20,000, furniture is of 10,000, so total will be 30,000, and here again capital is of 30,000. Here dash. So here we can see that total of this will be the same. So this is the first transaction. Now let's see the second transaction, and for second transaction the transaction is rupees 5,000 deposited in bank and open the account. For that cash is going out of the business and bank is the receiver. So bank account debit to cash. That journal entry we are going to pass. So for that it is 5,000 and 5,000. Here again we can see that bank balance is going to be increase and cash is going to be decrease. So here very first cash is of 20,000, from 20,000 minus deposited in bank, and it is 5,000. So remaining cash will be 15,000. Then there is a furniture. So furniture is of rupees 10,000, and again we can see that there is a bank balance. So that will be 5,000. So total of this will be again 30,000, and here capital is of 30,000. So this also going to be equal. So this is the second transaction. So that is the effect of second transaction. Now let's see the third transaction, and third transaction is goods of rupees 8,000 purchased from Rajesh. So purchase account debit to Rajesh. That journal entry we are going to pass. Here goods of rupees 8,000, and here because of this transaction stock is going to be increased and liability also is going to be decreased. is also going to be increased. So here cash account will be remain the same 15,000. Then furniture will be 10,000. Then bank balance will be 5,000. Then stock will be of 8,000. So total of this will be 38,000. And here capital will be 30,000. So that is also 30,000. And here again liability of Rajesh, and it will be 8,000. So that we are going to write down like this, and here we are going to finish the transaction. So now let's see the next transaction, and next transaction is goods of rupees 6,000 purchase for cash. So here purchase account debit to cash, that journal entry we are going to pass. And it is of rupees 6,000. So here, because of this transaction, again stock is going to be increased, and it is a cash transaction, so cash is going to be decreased. So here, cash is of 15,000 minus purchase. Purchase is of rupees 6,000. So balancing cash will be 9,000. And then there is a furniture. Furniture is of rupees 10,000. Then bank balance is of rupees 5,000. Then stock is of rupees 8,000 and plus purchase. So purchase is of rupees 6,000. So total will be 14,000. So here you can make the total of this. Again it will be 38,000 because 6,000 is deducted from here and it is added to this account. So that will be 38,000 and capital is 30,000. So that we are going to continue 30,000. And liability of Rajesh, that will be 8,000. So that 8,000 we are going to continue. So here our transaction number 4 is finished. Now let's see the next transaction, that is transaction number 5. And for that let's see the transaction. Goods of rupees 5,000 sold for rupees 9,000 to Raman on credit. So here we have sold the goods. For that Raman account debit to sales, that journal entry we are going to pass. Raman account debit to sales account. So here the amount will be 9,000. Amount will be 9,000. Goods is of rupees 5,000, but we have sold at 9,000. So amount will be 9,000. Here, because of this transaction, as we know that asset is going to be, receivable is going to be increased. And stock is going to be decreased. Cash will remain the same. So here cash will be 9,000. Then Furniture will be 10,000. Then bank balance will be 5,000. Then stock is going to be decreased by 7,000. As we know, stock is going to be decreased by 5,000, as we know that we have sold the goods of rupees 5,000. So here sales decreased by 5,000. So remaining stock will be 9,000. And here receivable is going to be increased. So debtors, receivable also called debtors, and debtors is going to be increased by 9,000. So here these are the effects that we are going to give for this, and total of this will be 42,000. And now capital, in capital also we are going to add the profit portion. That profit portion will be 4,000. 9 here we have sold the goods for rupees 9,000, but the goods is of rupees 5,000. So difference is 4,000. That 4,000 we are going to add here in the capital account. So capital is of rupees 30,000 plus profit of rupees 4,000. So that is going to be 34. And here liability of Rajesh. And that will be 8,000. So student, you may note down this, then we are going to see the another transaction. Transaction number 6. Goods of rupees 3,000 sold for 6,000 in cash. So journal entry will be cash account debit to sales. So here we have sold the goods for 6,000 rupees. So here, because of this transaction, cash is going to be increased, stock is going to be decreased, and capital is going to be increased. So here, stock decrease, then cash increase, and capital increase. Here, very first is a cash account. So cash account was of rupees 9,000 plus sales. Here sales is of rupees 6,000. So we are going to add 6,000. So cash will be 15,000. After that there was a furniture. So furniture is of 10,000. Then there was a bank balance, and that bank balance was of rupees 5,000. And then the other asset was a receivable, that is debtors. So debtors was of rupees 9,000. And again the next asset was stock, and from the stock we have deducted 3,000. So from 9,000 we are going to deduct the sales, and here we are going to deduct the cost price of a goods, and that will be 3,000. So stock is going to be remain of 6,000. So here the total of this will be 45,000. And let's see the capital account. So capital account was of rupees 34,000, and in that we are going to add the profit portion. So that profit is of rupees 3,000 that we are going to add. So total will be 37,000. And liability of Rajesh, and that is of plus 8, it will be 45. So here we are finished with this transaction, and now let's see the next transaction. So next transaction is the transaction number 7. Goods of rupees 1000 returned to Rajesh. So it is a purchase return. So we are going to write the journal entry for that Rajesh account debit to purchase return. So here goods is of rupees 1000 we have written. So 1000, 1000. So because of this, stock is going to be decreased as we have sent it back. So stock is decreased and liability of Rajesh is also going to be decreased. So both is going to be decreased. And here let's write cash account will be remain same 15,000. Furniture will be same 10,000. Then bank balance will be 5,000. Then debtors will be 9,000, and stock is going to be decreased. So 6,000 minus purchase return of rupees 1,000. So stock is going to be remain by 5,000. So here the total of this will be 44,000. And here we are going to write capital as it is 37,000. So that will be 37,000. And here liability of Rajesh 8,000 minus we are going to write purchase return of rupees 1,000. So liability will be 7,000. So here 37 plus 7 will be 44. So here the transaction is going to be finished. Now let's see the next transaction number. Transaction number 8. Goods of rupees 2,000 returned by Raman. So it is a sales return. For sales return, we are going to pass the journal entry sales return account debit to Raman account. That journal entry we are going to pass for 8 transaction sales return account debit. Raman account. So here it is of rupees 2,000. So because of that, stock is going to be increased and debtors is going to be decreased. So cash will be remain the same 15,000. Then furniture is also going to be remain same, that will be 10,000. Then bank balance will be 5,000. Then debtors is going to be decreased. So debtors is of rupees 9,000. From that 2,000 is a sales return. So that is going to be decreased. So total will be 7,000, and because of this, stock is going to be increased. Stock is of rupees 5,000 plus sales return. So it will be 2,000. So stock will be 7,000. So here the total of this will be 44,000. And here capital will be 37,000 and liability of Rajesh will be 7,000. So that is going to be 7,000. So students, you may note down this in your notebook. Then we are going to see next transaction. Transaction number 9. Goods of rupees 1,000 destroyed by fire. So loss due to fire account debit to purchase. The journal entry we are going to pass, and because of that loss is a loss to the business, and for that we are going to decrease the capital account. So here we are going to decrease the capital account as well as we are going to decrease the stock account. So journal entry for the 9th transaction will be loss due to fire account debit. To purchase account. Here the amount will be 1,000. 1,000, and because of this capital is going to be decreased as well as stock is also going to be decreased. And here cash is going to be continuing, and cash was 15,000. Then furniture was of 10,000. Then bank balance 5,000. Then receivable, that is also called debtors, and debtors is of rupees 7,000. Then stock was of rupees 7,000. From that loss is going to be deducted 1,000. So it will remain 6,000. So total of this will be 43,000. Here capital was of 37 minus loss 1,000. So it will be 36. Here again 36. And liability of Rajesh is going to be 7,000. So total will be 7,000. So 36 plus 7 is equal to 43. So that is going to be 43. And now let's see the next transaction. And next transaction is date number 10, and date 10 is telling us that salary paid rupees 2,000. So salary is a expense to the business, and salary account is going to be debit and cash account is going to be credit. Let's pass the journal entry for that. Salary account debit to cash account. And here it is of rupees 2,000. 2,000. So because of this, cash is going to be decreased as well as capital is also going to be decreased. So capital will be decreasing by paying expense. We are going to decrease the capital. So cash is of rupees 15,000 minus salary of rupees 2,000 that we are going to deduct. So cash will remain 13,000. Now furniture is of rupees 10,000. Then bank balance is of 5,000. Then debtors is of rupees 7,000. And stock is of rupees 6,000. So total of this will be 41,000. And here capital will be 36,000 minus salary paid rupees 2,000. So capital is going to be remain 34,000. So here 34,000, and here liability of Rajesh will be 7,000, and here 7,000. So 34 plus 7, it will be 41,000. So here is the total. Now let's see the next transaction, and next transaction is on date number 11, that will be salary outstanding is rupees 1,000. So here the salary account is going to be outstanding. So general entry will be salary account debit to outstanding salary, and for that expense, because of expense, capital is going to be decreased, as well as because we haven't paid salary, so liability is going to be increased. That is 1,000. Here capital decrease and liability increase. Here cash is going to be remain the same, 13,000. Then furniture is of rupees 10,000. Bank balance of rupees 5,000. Then debtors is of rupees 7,000, and stock is of rupees 6,000. So total will be 41,000. And here capital is going to be decreased by 1,000. So capital account 34,000 minus outstanding salary will be 1,000. So capital will be 33,000. Here liability Rajesh will be 7,000, and here another liability is outstanding salary, and that will be 1,000. So total of liability will be 8,000. So you may note down this, then we are going to see the next transaction. Next transaction is transaction number 12, and that is commission received rupees 4,000. So here commission is our income that we have received in cash. So cash account debit to commission, that general entry we are going to pass, and for that cash is going to be increased, as well as capital is also going to be increased. Cash is increased, as well as capital is going to be increased. So here cash account 13,000 plus commission 4,000, total will be 17,000 plus stock So stock is of rupees 6,000. Then furniture will be of rupees 10,000. Bank balance is of rupees 5,000. Then furniture, bank balance and debtors. So debtors is of rupees 7,000. So here the total of this will be 45,000. And here capital account. So capital was of rupees 33,000 and that plus commission 4,000. So total capital will be 37,000. And here we are going to make the total of capital, that is going to be 30,000, and liability of Rajesh. Liability of Rajesh will be 7,000 and outstanding wages will be 1,000. Outstanding salary will be 1,000. So that will be 8,000. So for that. Now let's see the next transaction. And next transaction is number receivable dividend. So receivable dividend account debit to dividend, that journal entry we are going to pass, and because of that receivable is going to be increased as well as capital is also going to be increased. Receivable dividend account debit to dividend account. Here the amount will be 2,000. Amount will be 2,000, and because of this transaction receivable is going to be increased as well as capital is going to be increased. So both is going to be increased, and in this situation cash account will be 17,000. Then stock will be 6,000. Then furniture will be 10,000. Then bank balance will be 5,000. Then debtors will be 7,000. So here we can see the again we are going to write down the receivable of dividend. Receivable of dividend, and it will be 2,000. So total will be 47,000. And here capital will be 37,000 plus receivable dividend. It will be 2,000. So total capital will be 39,000. And here liability of Rajesh will be 7,000 and outstanding salary will be 1,000. So total will be 8,000. So here 39 plus 8 it will be 47. So for that, next transaction, insurance premium of shop paid rupees 5,000. So here insurance premium is an expense. Insurance premium account debit to cash account. That journal entry we are going to pass. Because of this transaction, cash is going to be decreased as well as capital also going to be decreased. Let's write the transaction. going to be 16,500. Then stock 6,000. Furniture 10,000. Then bank balance. Bank balance 5,000. Then debtors 7,000. And receivable of dividend, it will be 2,000. So here we can see that total of this will be 46,500. Here capital will be 39,000 minus insurance premium of 500. So that will be 38,500. And liability of Rajesh will be 7,000. And outstanding salary will be 1,000. So total will be 8,000. So you may note down this in your notebook. Transaction number 15. A computer of rupees 8,000 purchased from Sri Krishna Computer Company. So here we have purchased the computer. So computer account debit to Sri Krishna Computer Company. That journal entry we are going to pass. And because of this transaction, asset is going to be increased as well as liability is also going to be increased. Very first asset is a cash account and that is of 16,500. Then we can see the next is a stock and stock is of rupees 6,000. Then the next is a furniture and furniture is of rupees 10,000. Then bank balance is of bank balance is of rupees 5,000. Then the next will be stock already written and then debtors account, and debtors is 7,000 and receivable dividend, and that is of rupees 2,000. And next is our computer. So computer is of rupees 8,000. So for that, now let's make the total of this. It will be 54,500. Now let's see the capital. So capital is of rupees 38,500 and liability. In the liability of Rajesh will be 7,000. Then outstanding salary is of rupees 1,000. Then Sri Krishna Computer Mart and it is 8,000. So total of liability will be 16,000. So that is the transaction. Now let's see the next transaction. And next transaction is of transaction number 16, and it is telling us that owner withdrew rupees 1,000 from the business. For that bank account debit to cash. That journal entry we are going to pass, and because of that cash is going to be decreased as well as capital is going to be decreased. So cash is 16,500. From that drawing, for drawing it is below, so it will be 1,000. So cash will be 15,500. Then stock is of 6,000. Then furniture of rupees 10,000. Then bank balance is 5,000. Then debtors 7,000. Then receivable dividend 2,000. Computer 8,000. So total will be, here we can see that total will be 53,500, and here capital is going to be decreased by 1,000. So 38,500 minus drawing 1,000. So it will be 37,500. So total will be 37,500, and liability again we are going to write down the same. Liability Rajesh 7,000. Outstanding salary 1,000, and Sri Krishna Computer Mart and it will be 8,000. So total will be 16,000. So student, you may note down this. Then we are going to see the next transaction. Account of Rajesh settled. So here we have settled the account of Rajesh. So we are going to give him money. For that Rajesh account debit to cash. That journal entry we are going to pass. Here we are supposed to pay him 7,000, so that we already paid, and for that cash is going to be decreased and liability is also going to be decreased. And here cash account with us cash is of rupees 15,500 minus liability paid of Rajesh. So that will be 7,000, and remaining cash will be 8,500. Then next will be stock. So stock is of rupees 6,000. Furniture is of rupees 10,000. Then bank balance of rupees 5,000. Then debtors. So debtors is of rupees 7,000. Then receivable dividend. Receivable dividend of rupees 2,000. Then we can see the next was a computer that we already purchased. So computer of rupees 8,000. So total of this will be 46,500. Now let's see the capital. So capital is going to be given the same, and capital account is 37,500. So here 37,500, and liability of Rajesh is going to be decreased. So here liability Rajesh, it is 7,000 minus paid 7,000. So it will be nil. Now next liability is the outstanding salary, and that is of rupees 1,000. And Sri Krishna Computer Company, so that will be 8,000. So total liability will be 9,000. So 37 plus 9. 37 plus 9, it will be 46,500. So this is the transaction. Now let's see the next transaction. So next transaction will be that the Raman has settled his account. So Raman supposed to pay us rupees 7,000 that he is going to pay. For that cash is going to come. So cash account debit to Raman. That journal entry we are going to pass. Raman is our debtors. Okay. So debtors account. So here we are going to get the 7,000 rupees, and because of that cash is going to be increased, and debtors, that means the receivable is going to be decreased. So here cash increase and receivable decrease. So cash is of rupees 8,500 plus this Raman account. So Raman has paid us rupees 7,000. So total will be 15,500. And here stock will be 6,000. Furniture will be 10,000. Bank balance will be 5,000. Then debtors is going to be removed. So debtors we are not going to write off. Debtors, that 7,000, and now it is received. So 7,000. So total will be theirs, and now receivable dividend. That will be 2,000, and computer will be 8,000. So here we can see that the total of this will be 46,500. And here capital will be 37,500. So that is again going to be 37,500. And here liability will be only outstanding salary, that will be 1,000, and Sri Krishna Computer Company, that will be 8,000. So total will be 9,000. So here again we can see that 37,500 plus 9,000, it will be 46,500. So here we can see that with the help of equation we can prepare the balance sheet. So here our chapter number 5 is finished. In our next video we are going to see next chapter, that is the subsidiary book, chapter number 6. Thank you students for watching this video.